you have student loans, the 2020 election could have a big effect on how you manage what you owe. That's because Donald Trump and Joe Biden have quite different approaches to student loan policy. So let's dive into what the two candidates propose and how that could affect you. Joe Biden has put forth a pretty comprehensive student loan policy plan, which tweaks the programs that are currently available to borrowers. The most important proposal that Biden has put forth is limiting student loan payments for those who make under $25,000 per year. So he's suggesting that any federal student loan borrower who makes under $25,000 a year won't have to make any student loan payments at all. And if you make more than $25,000, you'll pay 5% of your discretionary income per month after the first $25,000 is taken under consideration. Then all borrowers will also be eligible for student loan forgiveness after 20 years of payments, and that will be tax-free. That's a big change from what's currently available to student loan borrowers. Right now, borrowers have the option of several different payment plans that could be tied to your income or not. You could pay 10% of your income, 15% of your income, you could pay over 10 years or longer. Biden's proposal would simplify student loan repayment, and it would make it so that everyone ends up on the same plan automatically, but it would be possible to opt out if you want to. Another change that Biden is suggesting is updating the Public Service Loan Forgiveness Program. That's a program that's available to borrowers who work for nonprofits or the government, and they can repay their loans over a 10-year period and then get forgiveness tax-free at the end. Now, what Biden is suggesting is simplifying this program, broadening the types of federal student loans that are available to be repaid under the program, and that will hopefully make it more possible for more people to take advantage of it. Biden also proposes creating a new forgiveness program that would allow for $10,000 in forgiveness for public service workers and would allow for incremental forgiveness over 5 years instead of one big forgiveness amount after those 120 payments as is currently allowed. But the campaign hasn't released a lot of details about how the current public service loan forgiveness program and this new program would interact. One other change that Biden is suggesting is putting forth more protections for private student loan borrowers. Everything we've talked about so far only relates to federal student loans, and about 10% of students with loans currently in repayment have private loans from banks or credit unions or online lenders, and they generally don't get the benefit of as many consumer protections. So Biden's campaign says that he will provide more protections for private loan borrowers and that he will make it more possible for them to get their loans discharged in bankruptcy, which right now is very difficult to do. Donald Trump's student loan plans were put forth in his 2021 budget proposal to Congress. Now, these are proposals that you can view as his best case scenario for student loan policy, but it's unlikely that all of these will actually be made into law anytime too soon because they will require negotiation with Congress and legislation in order for them to actually happen. But these different policies can give us an idea of how Donald Trump views student loans and what you could see happen if he wins in November. The first policy change that he's suggesting is limiting student loan borrowing for graduate students and parents who participate in the PLUS federal loan program. Right now, there isn't a cap on the amount of PLUS loans you can borrow. Essentially, you can borrow up to the cost of attendance at a college minus any financial aid you've received separately. That means that borrowers such as graduate students and parents can end up taking out a lot more student loans than they could potentially afford. Trump has suggested limiting PLUS borrowing to $100,000 over the course of a student's education for parents and limiting it to $26,500 for graduate students in total. That would be a big change and could potentially help borrowers from taking out more loans than they can safely manage. Another suggestion of Trump's is consolidating and simplifying the income-driven repayment plan program. This is also something that Biden has been looking at, and of course, he suggested putting forth one program for everyone that would be income-driven. Trump's suggestion is simplifying all the income-driven plans that currently exist into one that limits payments to 12.5% of discretionary income per month. Another thing that's different about Trump's and Biden's income-driven repayment plan proposals is that Trump suggests all borrowers who have undergraduate student loans should repay them over a 15-year period, whereas any borrowers with any graduate student loans would repay them over a 30-year period. Trump has also suggested eliminating the subsidized federal direct loan program. The way that federal direct loans work is there are two different types. There's unsubsidized loans and subsidized loans. Subsidized loans are similar to unsubsidized in that they come with an interest rate that you are supplied with when you first borrow the loan, but students don't have to pay the interest in certain periods, and the federal government actually subsidizes the interest that accrues when a student is in school, when they're in their grace period after graduating, and when they're in a period of deferment, when they have postponed their loans for a number of reasons. Trump has said that it's possible and we should eliminate this program because some of the other changes that he's suggested, such as simplifying income-driven repayment, would be sufficient and fair. Now, this could affect the students with the most financial need because those are the ones who qualify for subsidized loans. And it means that they would end up paying the interest during more periods of repayment and essentially paying more interest overall on their student loans. Trump has also suggested eliminating the Public Service Loan Forgiveness Program. Now, that's the program that allows for repayment over 120 months to a borrower who works in public service, such as a nonprofit or the government, and allows for tax-free forgiveness after that 120-month period is over. Trump has also said that this program potentially unfairly allows for public service workers to get more benefits for their student loans compared to those who go into the private sector. So what's important for borrowers to know about this potential change is that it would only affect borrowers who are starting out with their student loans in the year that this change goes into effect. That means if you're somebody who has been repaying your loans, planning to get forgiveness according to public service loan forgiveness in, say, 3 or 4 years, if in 2021 this program is eliminated, you would likely be, as they say, grandfathered in, meaning you could still get forgiveness based on the amount of time that you've already been repaying your loans at the end of that 10-year period, and you would still have access to the program that you've been planning to have access to all this time. If the program is eliminated, students who borrow loans for the first time starting that year would not have this program to look forward to, would not be able to pay their loans with the understanding that they can get forgiveness in the future. So that's a big change, but it would only affect those in the future based on what we know now about the conversations on this program. Now, it's important to know that, of course, all of these are proposals, and we don't necessarily know which will come into law. And of course, this all depends on who is elected in November. But it's important as a student loan borrower to know what's out there as a proposal, know how your loans could be affected by who wins in November, and keeping an eye on any changes that could really affect how much you pay or for how long you pay your loans.